Guys, welcome to Stock Talk with Nico Kritikos. Today we're going to be going through the 5 stocks that I'm going to be buying in the month of May 2023. All 5 of these companies I do already own. I'm just trying to lower my cost basis to make more money in the long run. So, first one on this list is going to be Adobe. A lot of people know already what Adobe does. They pretty much have a bunch of different software. They have cloud services. They recently integrated artificial intelligence to even further accelerate the technology in their products and services. And they have Photoshop, they have Illustrator, they have all these different softwares. It's a pretty large ecosystem and they have a giant customer base. So I'm pretty confident in Adobe stock. If you look at the P/E ratio for this company, it's cheap compared to where it normally trades. And if this stock goes down to $300 or close to it, I'm going to buy at least 2 or 3 more shares. If it stays around 350 or goes a little bit higher, then maybe I'll buy 1 or 2 more shares. We'll see what happens. But either way, I think right around this level is a healthy spot to get in. It's not a super great deal, but it's not a bad deal. So Adobe's number 1. Number 2 on my list, I just bought more of this stock a couple days ago, and that stock is going to be Target. So Target actually is trading a little bit higher as far as price to earnings go, because normally it trades a little bit cheaper. Recently, it's a little bit more expensive. However, it went up to about $180, and today I think it's about $150. So it is a little bit cheap if you're looking back at where it's been trading this year. If we go in the last year, you can see it's been as low. I think the lows were in the 140s and the highs were in the you see it kind of jumps up to about $180. So 150 is not bad. I can see the stock going lower. I can see it going to 130, 120, maybe even, close to 100 if things got super bad. But I feel confident buying in this $150 range. If you look at the 5-year chart, you can see that back in 2020, the stock was trading at these prices. And Target is one of those businesses where I feel very safe in this company. Even if I was to, have my position go down in the short term, I'm confident that it will come back in a pretty short period of time. So Target is number 2. And the way I organized this list was the higher the number, the more aggressive I'm buying. So Adobe was the least aggressive. Target is the next aggressive one. And then the third most aggressive one that I'm buying is going to be MasterCard. I bought a couple more shares of this stock a couple days ago. This one is trading at a pretty good valuation. If you look at its PE ratio, it's trading at 20 or 31 times earnings, which sounds like a lot, but for this company, that's actually a pretty good deal. Now, in the last 5 years, what you're going to see is that not in the last 5 years, but in the last 3 years, MasterCard has been trading around this $300 to $400 range. And that's why I think in the next couple of years, we're going to see another breakthrough. We're going to see it go probably to about $500. So I just made a video on my channel today going over why I'm bullish on MasterCard and the whole, in-depth analysis. So you can check that out if you want to learn more. But their return on invested capital numbers are out of this world, best you're going to find. And we're talking about a company that pretty much has a duopoly along with Visa. So another one I'm not too worried about. Number 4 on this list that I'm adding pretty aggressively is Tyson Foods. I've been adding this one for at least a month now. Tyson Foods, some exciting things coming out about this company. One is they're introducing self-driving semi-trucks to deliver food. And the other thing is I think their market share is about 25% or so. And this is another one I like feeling safe in my investment. So Tyson Foods delivers to hospitals, schools, restaurants. They own a bunch of different famous brands. That's why I like it. This stock look at the last 5 years. You can see it's pretty much the lowest it goes. $60 a share is pretty cheap. So that's number 4. I'm very happy about Tyson Foods. Number 5, the most aggressive one I've been adding, U.S. Bank. This one I think I have the most amount of money in compared to the rest of these. And this one I keep buying. The dividend is extraordinary. A lot of people were worried about people taking their money out of these banks. U.S. Bank actually had a 6% increase in deposits, and that was higher than all other banks, even JP Morgan Chase. So right now I'm down 10%, right? But my cost basis is $34. I feel like that's healthy. The dividend is nearly 6%, and that's why I feel good about this.